friends. Today we'll be talking about how to use Runalgo.in. Runalgo is mainly built on two major pyramids. First one is option chain, and the second one is money flow, which you guys know as MME. From experience, I can tell you that both option chain and MME are trustworthy and leading indicators, which can show the direction of a move before the price action actually happens. So let's not waste any more time and let's get right into it. Firstly, I'll open NSE's website. In there, I'll open Nifty's option chain and its last Friday's closing option chain. If we go to the ATM price, which is 22,400 here, now we'll only look at out of the money options and we'll look at 10 strikes up from the ATM and 10 strikes below the ATM. So in our case, it's from 21,950 to 22,950. We'll mark the highest open interest for 10 strikes out of the money call options and 10 strikes out of the money put options. We'll look for the top 3 highest ones. On the call side, we can see the first one is 22,500, which has an open interest of 2.4 lakhs. Second is 22,600, approximately 2.2 lakhs. And third highest is 22,900, which is 1.9 lakhs. We'll do the same for put side, which is 22,400. Then 22,000, and third one is 22,200. The same data is shown on OI option chain on the Runalgo website. Over here you can see that there has been given rankings on in the money options and out of the money options both. Using this data, you can find the support and resistance of the market. This data you can calculate the previous day night once NSE releases the final option chain. But how you can understand this data is wherever there is a high open interest in the call side, it can in a out of the money call side that shows resistance, and out of the money put sides those show support. What you can do is when the market opens the next day, you can see if there is a major gap, right, upwards or downwards. If it's near a support, you can use this data to understand if it will reverse or if it will go the same direction. What I mean by that is, look, if it gaps up, right, there is multiple way you can do that. There can be only a minor gap up, such as 10 points, 20 points, right? But if it's like a big gap up, it can be near a resistance or above a resistance, right? So in those cases, even for gap down, it can be near a support zone or below the support zone. Suppose the market gaps up, right? Then what happens is, if the call option that's a resistance, right? If the open in COI percentage in there on that strike, if it's below negative 20%, if it's negative 21, 25, 30%, then we can assume that the writers are closing their position and the market will still go in that bullish trend upwards. But there could be another case to the scenario to this. It is which is that the resistance zone, the COI is not decreasing, but it's increasing, right? In that case, what it shows is the writers that were in there initially from previous day, they are very certain that the market will reverse and it will go back down, and then they are building their positions more and more. This, due to this, right, the market will reverse. Same works for the put side, that if it's near a put support and the put OI is increasing, then it shows that it will reverse. And you can use this near in gap up and gap down situations. If you are unsure what to do, you can use this as a really helpful tool. But you'll have to make sure of one thing: if it's like one day before the expiry or on expiry, right? This is because that on expiry, right, if the big player has sold the option a week earlier, they'll have a lot of premium decay already as profit. So they have some room to make losses, which you can double check if they are making losses or not is by going to your broker's chart or something and opening up weekly VWAP. That way you can see like if they are above the average cost of the week. So if the current price is above the average cost of the week, they are currently in losses. They are most probably in losses right now. So they will have to cut their losses and make the market go or in that direction. That's about it for this page. Let's move to the PCR OI analysis page. If you have done option trading and stuff and studied about option trading, you would have probably heard the word PCR. PCR basically is put call ratio, where put OI, it's put OI divided by call OI in simple terms. So on this website, you can see PCR itself and CE percentage and PE percentage, right? So if you guys have opened your broker recently, you probably would have seen a warning saying that 9 out of 10 option traders lose money, and the people who make profit, they have to give a lot of that to the broker as brokerage. So you might be wondering, why do 9 out of 10 people lose money, right? This is because that if you have ever tried to buy an option, right, you would have seen that you only need 5 to 10,000 rupees as margin, while if you want to sell an option, you'll need at least 1 to 2 lakhs if you want to sell a naked option, right? Due to this, the market is divided into two parts: someone who has a lot of money and sells option, and someone who has very little money and buys option, right? So many retail players who have just some money in their trading account, they usually just buy the options, right? Because they can't sell them. So due to this, right, many retail players buy an option and create high open interest. From this knowledge, we can conclude that wherever there is a lot of open interest, we will try to avoid that side, because over there will be a lot of retail players, and what we know is 9 out of 10 people lose money, right? So it's obviously retail players who lose money, right, on a normal basis. So from that knowledge, we can say if call COI is greater than put COI, we'll try to avoid buying call options. But this doesn't necessarily mean that we'll always buy put option immediately, right? We'll wait. Agreed that there is call open interest more, but that doesn't necessarily mean that the market will uh, that the market is in favor of a put option buyer, right? But what we can see is if the call percentage, right? Let's talk about first going down, right? If the CE percentage, right, shows more than 65% and PCR shows less than 0.6%, right, we can say that the market will fall, right? And we can buy, that's a good opportunity to buy a call put option. But we also have to make sure of a good stop loss, and our stop loss should be pretty close, right? what what could be a good stop loss is the last column you can see is price and VWAP, right? If the price is very close to the VWAP, right, we can say that we'll consider VWAP as our stop loss, and we can take a trade, right, in a very small quantity. Though, although initially we'll start with small quantities, then gradually as you see the behavior, and then you'll feel more confident, right? When we are talking about buying an option, right, buying a call option, what we'll have to check for is the PE percentage, right? It should be greater than 65%, and the PCR should be greater than 1.51, right? And the price should not be very far from its VWAP, because then your stop loss would be very far away, and before the stop loss actually hits, you will have to take a lot of losses. Let's move to the next page now, which is option Greek chart. On this page, right, you can see that there is a lot of details regarding option Greeks and stuff, and COI and price change and stuff. What I said last time in PCR thing page is that big players usually sell an option, right? The reason I use the word usually is because sometimes they buy an option, and we can't be very sure that they have sold an option or bought an option. This is because we don't know, right? But we can use Greek start to help us understand this Greek start page to help us understand if the big player has bought an option or sold an option, right? Whenever they are selling an option, right, on mass quantities, what will happen is they'll absorb a lot of buying pressure, because they're selling, right? They'll, for them to sell in big quantities, they'll have to absorb a lot of buying pressure. So what happens is the IV of that particular option, right, it becomes very flat or starts going down, right? Because they are absorbing a lot of pressure. There is no pressure in the market left. So the volatility of that particular option will drop a bit. So what we'll do is we don't look at very, this idea doesn't work on very deep in the money or deep out of the money options. It typically works ATM -1, ATM and ATM options, ATM +1 options. What happens is when market is, suppose we look at ATM, right, and we see that the call side there is more open interest, right, compared to put side, we'll start keeping an eye on put COI and price action, right, price change. Now if you see these two, there can be 4 combinations. First one is the COI is increasing and call price, the premium of the call is decreasing. In that case, right, what happens is the writers, this scenario shows that the writers are active. The another scenario can be that call COI is decreasing and the price is increasing. This shows that the writers are closing their position. Third scenario can be that the COI of the option is increasing and the price is also increasing. This shows that there is buying happening in that particular strike, in that particular option. Sorry. The fourth and the last scenario is that the COI is decreasing and the price is decreasing as well. This shows that the buyers are closing their position. Now we know what is happening in the option, right? But we are still unclear if it's done by big players or small players, right? For that, right, what we'll do is, if there is writing happening, right? If our conclusion is writers active, right, or short build up, what we'll do is we'll look at the IV change from the morning or the last 5-10 minute candles. If the IV is decreasing or if it's really flat in a stable situation, we can conclude that the writer's activity that we have said is true. We can do the same for the put side. Now, if there are writers active on call option, right, and we concluded it's done from big players, we can say that market will fall, right? And if it's done on the put side, we can conclude that the market will go up. When we look at everything, all of these pages one by one, right? If suppose in the OI option chain we see that the call option writers are not leaving their position, in PCI data we can see that there is a lot of call COI happening and the PCR is very low, like 0.5 and something, right? We can and the Greeks data show that the writers active that we concluded is done by big players. So using all of this data point, right, we can see that the market will fall and we can conclude and we can be 101% sure the market will definitely fall. Now you might be wondering, right, that everything that I showed up until now was all related to option chain, and right, and initially I said everything. There are two major parts. One is option chain and the second one is MME, right? Money flow and MME, right? So let's now talk about money flow or MME, which you guys know as MME. Now there are two sub parts of this MMA, right, of money flow. First one is MMA and the second one is OTR, right? They are very similar to each other, but there is only some differences, right? MMA is basically a point in the market, right, where we can say that buying pressure and selling pressure is almost same, right? And to calculate MMA, right, we have to consider all index shares, all of their futures and index futures and option transactions. We have to consider all of them, and after that we can find a place in the market, like a point in the market where it can be a really good support resistance. It's basically a major line in the market for the day, for today's trading session, right? OTR is almost same, but it also considers options for index shares options as well in its calculations. What we can conclude, right, from this is, if the index price, right, it's above its MMA, we can say that there is a lot of the buyers are winning the situation right now currently, and the market will go up. If the index is below the MMA, we can say that the sellers are winning and the market will fall, right? For OTR, let's go to the option chain OI analysis page on Ranago. Over here you can see that there is a lot of data. This is nothing major, but it's everything combined as a summary on here. First we have future and VWAP, followed by their sentiment, the sentiment of future and VWAP. Then CE open interest, PE open interest, the difference between them, and the conclusion we get from the difference. The percentage and stuff is not on here, percentage in PCR. For that you'll have to separately open PCRO analysis, PCR analysis on a different tab. And then we have MMA, the index price and what it concludes. And then we have OTR, right? There are I think 9 combinations for OTR, but there are only 2 major ones which we have to remember. One is ABC and the other one is CBA, right? ABC is basically means a bullish market trend, and a CBA means a bearish market trend, right? And using all of these data and all of this data combined, right, we can see a trades column, right? From today's video you'll probably realize how we are calculating the trades column, right? But it shows what we have seen so far. It's basically shows a way to trade the market, to trade using this only OI analysis page, right? If somebody only sees this MMA and OTR, right, a perfect bullish setup could be for them could be MMA conclusion is very bullish, OTR conclusion is bullish, and market is very close, comes back down to MMA, really close to MMA, but doesn't cross it. It shouldn't cross the MMA, it should be very close to the MMA. So for Nifty it can be 10-20 points, for Bank Nifty 40 to 50 points. That's really close to the MMA. If it crosses the MMA, then it's good to avoid the trading in that scenario, because OTR is seeing bullish, right? But if it's very close to the MMA and OTR is bullish and MMA was bullish, right, MMA is still bullish, it could suggest a very good bullish setup. Same for bearish, that MMA's index is below the MMA and shows a bearish conclusion. OTR is showing a bearish conclusion, CBA. Then it's a perfect bearish setup. You can certainly trade, get a buy option, buy put option, or make a bearish trade, right? So this is it for right now, right? If you are unsure of what we have talked about up until now, what I suggest is take small notes, test what we have talked about in the live market. If you're still unsure, you can WhatsApp, but I suggest commenting down below, because that way, right, if somebody has the same question, they can look at the comments and find the answer in the comments, right? And so I'm actually very sorry about today. I was actually meant to take a live session today, but due to some circumstances was not able to. But we can have a question and answer section like next week or sometime, if you are unsure, really unsure about it. And what from next week, right? We'll not talk about what is on Renalgo. We'll talk about how you can use Renalgo and make trades on Strategy Builder or something, right? And how we can adjust those trades if things don't go right, or if things go really right, how we can stay book the profit and stuff. And thank you for watching, guys.